I'm Rahman Junaid, founder and chief researcher Hurun India. So we've been working with Burgundy Private for the last 5 years to put out the list of most valuable 500 non-state-run enterprises in India. The whole objective of the report is to try and understand the story of India's private enterprise through the eyes of these companies. We have with us today the Sonali Dahiya, Group Heads of Burgundy Private, who has seen this transformation up close through her initiatives in Burgundy Private. And we speak about research from data and annual reports and secondary filings, and from that perspective, but Sonali sees most of these individuals up close. And it's my immense pleasure to have a chat with Sonali today and give a brief perspective on how we've seen this research evolve and how is Burgundy Private touching many of these entrepreneurs who are creating wealth, and how is One Axis playing a key role in helping some of these entrepreneurs get into wealth preservation and the wealth increments as well. Let's listen to Sonali on the transformation of the wealth landscape in India. So welcome, Sonali. It's been 5 years since it's launched the first edition of Burgundy Private Hurun India 500, and we launched the first edition before COVID. Since then, COVID happened. So many things happened in the last 5 years. It's been, in my career, the last 5 years has been the most dynamic 5 years, which has been, you've seen a few wars, say the least, and it's been experience. But before we deeper into the research in itself, I would like to understand, how have you seen let me ask you, how have you seen India evolve through your professional and then your career from the day when you started to where it is now? Then we can get into our research.
Yeah, I think it's been an evolution since I started way back in 1997, actually, in this industry, when wealth management was very, very early. So I spent time, with a family office of sorts at that point of time, and moved into a bank-led wealth management platform early 2000. And then it was more about some alpha over fixed returns. So mutual funds were very new. Larger families would typically look at tax-free bonds as one of the avenue of investing, or look at stocks. And the equity markets were very different than what they were today. In fact, that was the era of the whole dematerialization phase that then happened. So transparency, stock picking, etc. was done much differently than what it is done today. From then to being also risk averse, to having a lot of skepticism on looking at equity mutual funds, and the largely investments aside of tax-free bonds or fixed deposits was equity mutual funds, and the whole UTI US 64 phase before that. There was skepticism when investors would even meet equity fund managers. And I remember we used to do a lot of road shows with fund managers talking about markets and returns. To now, where there is much more sophistication in terms of products across asset classes. There are many more asset classes, from then being largely equity, debt, gold in a very different form, so commodities, to today where you have sophisticated asset class, you have REITs, InvITs, you have within debt, you have, your performing credit, venture debt, equities, there is unlisted, listed. There is tolerance of families has gone up. The larger families and entrepreneurs have more structured frameworks of looking at their own portfolios and planning, for. Then it was, very fewer, in fact, at the banks, at the multinational bank that I was, probably one of the first wealth management firms that started out and you introduced investments to clients through liquid funds. As they got comfortable, you moved to the next asset class, to short-term debt, to long-term debt, and then hybrids and equities. So it's evolved, now 25, 26 years down the line, you see a huge, many asset classes, more risk-taking ability, and many more instruments for people to invest, both domestically as well as now the global investing opportunity for clients has also become much better.
This to hold your thought in that part of your journey, right? So I've seen, I've been interacting as part of the job, which is I got speaking about some of these amazing entrepreneurs, family businesses, and so on. I do remember talking to one of my friends who was basically uh, who runs a 10 to $15 billion business, next generation entrepreneur. So he was telling me that till about a few years back, when his grandfather was alive, the entire family was not allowed to invest anywhere beyond fixed deposits, right? So, and they can't say no to it as well, because the business was essentially founded by the grandfather, and they've been running it, and they would just hold on to it, right? So going back to your journey, then what was the sort of tax rates there, and what was the alpha that everyone was looking at? Are people looking at, oh, net of fees, I want 10%? Was that the sort of conversation, or was it like, oh, let me just beat the FT and protect my money? What was the
Yeah, I think the evolution of looking at returns net of tax, fees, etc., has evolved over a period of time. It was broadly what are the gross returns and how you can make maybe a few 100 basis points over and above the fixed deposit returns. And like I said, the risk tolerance and ability to was very, very limited. And yeah, I think in the way some of the families operated, it was the patriarch who, took the decisions. To today, where either families also have their own family office teams who are, look at diversity of investments. There is much more structure in which the way, and, they are analyzing investments. People are also taking meaningful stakes in companies and businesses outside of their domain, and, wanting to play that game. Also, the next gen is playing a very different role today in the way money is getting managed with families versus what it used to be today. I mean, earlier. So, even today, if you look at some of the families until just very recently and few years ago would say, I understand my business very well, and that's where I reinvest back all my profits. And I'm willing to take as much risk because I know the risk and return.
and I can make more money in my business than anything else. That's it.
So now, the next gen's coming and saying that, okay, that's one philosophy, but we should diversify to look at other sectors, other investments. So I think, yes, that trend is changing.
And this year's list is very interesting for me because it's not been a great year because of all the turmoil that's happening in the world. And India, of course, has had an impact on it. But in many sectors that you look at, one is real estate, for instance. Now, compared to an economy like China, India has really stood apart, right? There is a lot of having seen and invested in some of these businesses, and having seen researched about these entrepreneurs, and having spoken to some of these entrepreneurs, optimism about doing business in India is never down. It's really high. Anyone who I speak to, large entrepreneurs, they're all saying, oh, this is the place to build, right? I've also seen a lot of acquisitions happening made by Indian companies to in foreign companies. You see that's a mega acquisition, be it Sun Pharma or be it, let's say, an Inox, a GFL family, or any big acquisitions, right? How do you see the evolution of the market, and how do you see the evolution of value creation that's happening in the country? Is it very much in line with the Burgundy Private Hurun India 500? We're essentially trying to speak about the economy through the eyes of these companies, right? Is there a lot of mirroring there? Do you see the
yeah, I think the trends we see in our business are very much on similar line. Firstly, we are seeing a lot of democratization of wealth and seeing wealth spread across beyond the top cities. So tier 2 and tier 3 cities, we see a lot of wealth creation happening. A report also covers now almost 50 cities, 18 states. So, various cities, be it Bikaner, Ludhiana, Rajkot, I think several cities which are covered.
And also important to clarify that these 50 cities have produced India's most valuable 500 companies. It's not like than any company. That's amazing. Yeah,
that's quite amazing. So I think we see that trend, and we've also kind of caught on to that trend over the last 12, 18 months and grown our practice in these markets. We also see the narrative, moving away from speculatives. We are seeing a lot of shift towards fundamentals. So we see markets rewarding fundamentals, companies with strong balance sheets, companies with stronger cash generation. And I think the report also covers how the 198 of the 500 companies that have grown. So I think that's another trend that we see very clearly as we are operating. And I think we are seeing new entrepreneurs, a lot of wealth creation happening in newer sectors like AI, defense, aerospace. And I think the report also talks about the huge valuation upsurge of almost, I think, 74% and above in some of these sectors. So I think those are big trends which we are sort of witnessing across as part of our business as we operate.
We must also speak about some of those companies who will potentially enter the list as well. And it's India as a country is producing some of these amazing gems. For example, there's one company in Bhavnagar called Madhu Silica, right? So they produce a silica gel for almost all the toothpaste in the world. So if anybody has brushed their teeth, they would have used their silica gel produced by Bhavnagar, right? It's almost a 4,000, 5,000 crore business, right? And there is another company again in Gujarat, which produce high quality, manufactured high quality peanuts, and that its company is called Kedut Seeds, and this peanut goes to almost all the Snicker bars in Europe and in markets. So there's some of these amazing companies being built in India. So in that context, how the opportunities are not limited to an AI or a space tech or even the new age economy, right? India is a market, it's a huge market, and we also have some of the most amazing entrepreneurial communities in different parts, right? And so you would see wealth creation not only in the traditional sectors, but also in these small niche sectors where somebody's focused on solving that one problem. How have you seen putting all this into context, how have you seen the fortune evolve in India from across sectors, across this period, across industries?
So, yes, I think there are a lot.
I mean, you would have seen a lot of entrepreneurs in tier 2, tier 3, you were saying when Trichur or South India or wherever. You've seen all these micro entrepreneurs who really focus on building that one thing.
Yeah. Yeah, I think beyond some of the traditional, sectors, of course, you continue to see manufacturing, you continue to see technology-led companies, of course, the whole AI, defense, aerospace, energy now.
Energy transition.
A lot of energy transition companies with, wanting to, reduce the energy dependence where India is. Lot of, I think, digital companies and with the financial transformation and giving the democratization of wealth. Sports companies, I think that is a large, sports franchises and the interest around sports and companies rate that is where we are seeing huge. So hospitality and medical aid solution companies, right? So whether it be the field of IVF or it is large hospitals or it is hospitals who are now catering to much more enhanced technology, to solve, customer issues. I can go that kind of medical tourism companies. Also, I see in several of the tier city where we are seeing increased entrepreneurial wealth. Of course, the traditional companies continue to do well, and as in some of the examples that you gave are very relevant examples and globally very competitive. So I think what's interesting to see is that you're seeing a lot of these entrepreneurs be rooted in their home markets, but the kind of companies that they're creating are globally very, very competitive, and they continue to do so.
And interestingly, you did mention about healthcare, right? There is one category of entrepreneurs who I think are really creating meaningful wealth, without a billionaires, but then they're creating meaningful wealth. Meaningful wealth means 50 to 100 crores sort of thing, right? I see a lot of micro acquisitions, micro M&As happening, especially in tier 2 cities. For example, one fund would come and say, oh, you was running a nice hospital. I'm going to buy it for 100 crores. Just get it. Or I'm buying somebody's running a great school, right? School which has got a really nice whatever, right? And then heavily profitable schools business, and someone just goes and buy that schoolhouse. That's again a 50 crore transaction, heavy liquidity coming in. So liquidity means further investments, new value creation opportunities. It just spreads out, right? Do you see that trend as well of this micro? I call them micro entrepreneurs because they are wealth creators, but maybe not the billionaire, but they're significant
Significantly. A lot of, you rightly said it, it's come up the micro spaces. So even in food, so you'll find a particular kind of food or a wafer or a namkeen, and very niche, just selected, one area which is expertise of that company, who are creating value, and you have either private equities investing in them, or they are sort of now expanding beyond their home market. So a lot of that trend, absolutely.
And in that context, your AUM has grown over $24 billion. And that's a 31% increase year on year, which would make it one of the highest AUM increases in the sector, right? And what do you see as a primary drivers behind this growth? Of course, of Burgundy Private is fantastic. And in addition to that, what all?
I think few things. One is, of course, the whole wealth creation that you're seeing in India. So I think we've been able to leverage that, well. Second is to being a bank-led wealth management platform has given us really the ability to cater to all the financial requirements of a customer. So to be able to take care of not just his wealth management, but his basic banking, be it lending, be it business banking requirements, be it succession planning, and various needs through our companies. And from that, we call our One Access ecosystem, to be able to take everything to a customer. So I think that has really helped us grow our wealth. We've also, like I've mentioned, gone to 52 cities over the last 15, 18 months. So that has helped us actually grow our share of wallet with families across the country, where we are seeing huge wealth creation happen, which your report also kind of evidences. Yeah, the report evidences meaningfully. And our focus now as a bank-led wealth management platform also has a strong element of trust that our clients see with us, being their banker, and want that one player who can give them integrated solutions. So we actually have presence in these markets. Our people are there. We are able to consistently take what we would give a customer in a metro city, deliver the same experience, the same products, the same platform with the same consistency in these cities. So that has helped. And we are moving from being a product provider to actually a more relationship-oriented approach, a more advisory, and that's helped us deepen our share of wallet with our HNI and UHNI families. So yes, we manage 24 billion. We've been growing at almost 31% year on year. We work with now 16,000 families across these 52 cities. And we also pride ourselves in working with 46 of the top 100 families now in India. So yeah, that's been, that's how Burgundy Private.
So that's a very interesting insight that you said, One Access, right? It sort of helps with you engaging with customers across their stages, right? From a startup to all the way to $100 billion business, right? Now, one question is that some of the companies that are featured in our report, Burgundy Private Hurun India 500, they not even exist. They were not even in existence 5 years ago. They were absolutely new, like the Zeptos, for instance, or an emergent AI which would enter the next year's list, or a Sarvam AI, right? These are massive wealth creation to the tune of, let's say, this will share the impact, right? We're talking about creating 10 to 15,000 crore value businesses with about 2,000 or maybe 1,000 to 2,000 employees, which never existed 5 years back. So that much size of value creation is happening, right? So how do you approach advising a client who's created wealth in the very short span of time? How do they perceive wealth creation? How do they perceive utilizing the wealth created? What is the sort of psychology that you've seen having interacted with them up close? Is it generating that extra alpha, or is it someone like Kunal Shah, who is very famous for investing back into the startup ecosystem? What is it that you see when you speak to such entrepreneurs?
So I think there is a large share of entrepreneurs who are newly created wealth that we continue to work with over the last 2 years, and that population is only growing in India. what we focus on primarily with these entrepreneurs is first to work in a very systematic way and create a structured approach in looking at how they need to manage their wealth, because they are created, astronomical wealth in a very short period of times, and how they need to diversify. So that becomes a second element of really working with them on also preserving wealth. So wealth creation, but also preserving wealth, also managing how to help them manage their liquidity. So because the risk tolerance in these entrepreneurs is also there. So they are constantly looking at newer ideas to invest in newer businesses, either grow their own business or investing in newer businesses. So how to also have the ability to create liquidity from, their portfolios to be able to do that, and, manage cash flows in that period of time to create optimal returns. Also governance structures, because their focus has been on building their businesses. How we come in to actually create a more structured framework, create a governance structure in terms of how they need to operate, versus how we have been working probably with some of the established legacy business families who operate, much.
What is the conversation centered around when you advise a first generation self-made entrepreneur versus a family-run?
I think family-run businesses, their frameworks are quite established. Right? So they already have a framework, which is what kind of asset allocation they would follow. So it's more around working within that framework. And mostly such businesses also have complicated family structures. So it's a lot about, the succession, managing the intergenerational transfer of money, working in that framework. Most of them would have family offices who also have their framework. So then the conversations become more around preserving wealth, getting the best returns within that existing framework, versus in a new age entrepreneur where most of these things are new. So our role becomes very, very relevant. So you create that entire framework. And in most of the legacy businesses, because they have created wealth, they are running very established businesses, the risk taking ability or the willingness to take risk on the financial portfolios is lesser. We see the ability to take more risk significantly higher in the new age founders who are also willing to take meaningful stake in investing in companies directly, and newer startups, and taking aggressive bets. So I think that's how the conversations becomes different.
Can I ask one question on succession planning? Generic question. I just want to ask the one trend that I'm seeing amongst the young entrepreneurs now, which was not there when my father was at my current age, right? Or was that people are more serious about writing a will right away. Even when as my parents would be about 65, 70 years old, he would not have written a will even now. But someone like me, I've already engaged a lawyer to start writing a will, right? So do you see such things amongst younger first generation entrepreneurs in terms of planning way ahead, in terms of their life, in terms of trusteeship, or creating a proper structure so that the next sort of wealth transfer can happen quite smoothly?
I see that trend is there, and we as advisors who are working with families are also bringing some of these conversations early on versus how it was earlier, right? So even though some of the new age entrepreneurs may have simple families and not very large joint family structures like you see in the older business families, but I think the need for it is very, very that awareness is much more there, and I think we are working towards with them to create all of this. So for us, for example, we leverage our own ecosystem, so we have our own access trusteeship. So succession planning becomes a very meaningful conversation right at the start. So when I said creating structured frameworks, also having a governance framework and succession planning, all of that sort of weaves in together when we work with, and we see that as well as the willingness to do that.
No, I can't stress how important this point is. I mean, even if you look at some of the biggest families in India, and just take the Burgundy Private Hurun India 500, ignore those companies like Axis or the other institutionalized companies, right? Almost every other company in the Burgundy Private Hurun India 500 will undergo an inheritance in the next 10 years, right? And if you combine that with the Hurun India rich list, that value is almost $2 trillion US worth of wealth being transferred from in the rich list alone. Well, that you're talking about what? Some 2,000 people, right? Now, yep. Another, the smaller across the country, right? So that entire ecosystem of trusteeship and you giving us a full offering, does client immediately or the people you talk to see an immediate value in that when you tell them this is there, or does it take a lot of time to think? It's interesting. What is the
Conversations take
yeah
time.
yeah
I think it's a thought process that builds in, because it's will creation is probably one of the simplest way to kind of take care of that need. But succession planning is much bigger and a deeper thing for families to think about. So these conversations take more time. It's not just with one member of the family; it's with their whole ecosystem. There is a thought process. So succession planning does take some time,
yeah.
but it builds very deep relationships to do what they need to do with families. So,
And in tier two cities, I think you touch upon it. 50 cities, some of these most amazing companies are being built. And what are your thoughts on that? You see a lot of energy when you go to some of these tier two cities. And okay, is there any one city that you went to with absolutely no expectation? You went there and you're like, oh, wow, that's so cool. Anywhere like that?
I should be commenting on one.
No, okay, two, three cities. Trichur or Cochin, maybe.
Yeah, no, I think many of the 50 plus cities that we have at Greenpeace our presence in show immense potential. And yeah, one is, when I visited and met the fraternity, the business families, or the, general client base that we have, to see the opportunity being immense. Now, cities like a Kochi, a Coimbatore, a Thrissur, even, I mean, in South, maybe even a Madurai or a Trivandrum. Rajkot, Indore, Surat, of course, Bhubaneswar, Jodhpur, Udaipur. These are many cities where one is seeing significant wealth creation. And you're seeing entrepreneurs who are creating globally competitive companies,
That's 100%.
world-class companies, but still very deep-rooted through to their local markets. And I see that the next gens who are going out, getting educated, gaining the exposure, are very willingly coming back and looking at companies and growing them with a very, wider lens of sort of building these businesses. So, which is very promising. And that's where the fresher perspective and fresher thought process, even on, there was a big family on the real estate side, for example, or they were, into some conventional businesses and then have diversified into few other industries. And the new gen is actually doing and creating, commercial complexes or residential complexes in a tier 2 city, which are very comparable to, let's say, the metros of Delhi and Bombay in terms of the condominiums that they're building. So that is, and you're seeing people looking at booking those, high value apartments in those cities, which means that there is appetite, there is interest in lifestyle change and the quality of living that you're seeing of, generally the ecosystem in these cities, the infrastructure. I mean, I sometimes in cities that I've gone for the first time, the infrastructure that I see that is built, the kind of offices that some of the clients have are are comparable or even better than I visit, offices in Delhi and Bombay. So I think that's like really exciting, very, very exciting. And that's a very promising trend for the future, because you're seeing wealth creation, you're seeing, its impact on the local economy and our community. And I think this trend will continue. In India, the wealth is not going to be concentrated in geographies. I think over a period of time, in years to come, we will see wealth, spread across geographies, across sectors, across cities, as in the years to come.
I think the Indians building global businesses, that's spot on. I think we just recently witnessed Emergent becoming a unicorn. That's one company which is being built in India. Almost one third of the revenue is from US, another one third from Europe, and from India it's only 9%. I think the entrepreneurs, they originally are from Bihar, and building a world class AI startup, and the most recent transaction happened at 12 times revenue, and that's lower I think Cursor transaction happened at about 17 to 18 times when the SpaceX bought out Cursor, right? So very good value, and that could very well become one of the largest company in the Burgundy Private Hurun India Private. Talking about that, what are the five sort of sectors, or forget five, some of the top sectors that you are really excited about in India's path to become a 10 trillion or a $20 trillion economy?
We touched upon earlier in the conversation, but I see advanced manufacturing here, uh, AI, in a big way, uh, defense and aerospace. I think because of the whole momentum as well as building domestic capabilities, technology-led companies, of course, and the whole financial transformation and digitization. I think those can be some big areas in addition to areas around, of course, the sports economy and
Energy talk.
healthcare, absolutely. I think energy transition is going to be another big area. So I think these are some key big themes where we see huge wealth creation in the growth journey of India over the next few years.
And how will one axis ecosystem support some of these sectors, right? Uh, right from value creation, which is mainly around the company, and wealth creation, which will be around individuals. How does one axis
This
fight
has
there?
been one of our very powerful strategies of One Axis. So we really look to break any corporate silos that may exist and come together as all parts of the bank for a customer. And entrepreneurs and wealth creators are looking at somebody who can actually give them integrated solutions. So as a bank-led wealth management platform, we can cater to all retail banking, we can cater to their personal banking needs, we can take care of their business banking, be part of their growth journey as businesses. Of course, take care of wealth management uh, through our subsidiaries, whether it's access to direct equity markets, through Access Securities, for investment banking requirements, to our Access Capital, investment products. We are an open architecture platform, but Access AMC also is in the wealth management side. So I think all of that comes together in a very meaningful way. And within the businesses, right from small entrepreneurs to absolutely large conglomerates, we have the spectrum to be able to, at a company level, even cater to the corporate salaries, banking for all the employees. I don't think so there is anything as a bank that we cannot cater to. And that's the approach and mindset that all our businesses and all our touch points to a customer work with. So we actually come together to be able to do that. And customers value that a lot, because at the end of the day, business banking and, wealth, business needs and personal wealth needs are in a way for an entrepreneur very interconnected. So they do want to deal with, this one person, this one institution, this one ecosystem who can actually cater to. And it makes us relationships much more stronger, deeper, and we become part of their journey of growth, both on the personal wealth side as well as on the business banking side.
Yeah, is it very exciting? Let me ask you, the role that you are now, which is to being group head of Burgundy Private. What part of wealth management you like the most? Is it dealing or talking to the entrepreneur, listening to their story, or coming up with investment ideas, or managing your own team? As somebody, as a women leader in a very heavily male-dominated sort of industry, right? I would really like to know what part of the role that you like the most.
So I started my career as a banker managing some families and have done that for a very long period of time. So that's the best part of what I enjoy in this role. And that's what keeps me always going. And that's the most exciting part, because when you engage with families or the patriarch or the decision maker or the promoter or the wealth creator, to actually sit with them and know their story, see their journey, and then become part of their journey, in managing their wealth. And especially as a bank-led wealth management platform, I think is very, very exciting. So, of course, managing teams, the strategy of the business, all of that, it gives you a high. But I think the most exciting part is always being with the client and actually being able to provide solutions. And when you can see the value addition that you bring to these families, or the impact that you can create with these families, I think that's the most powerful thing that keeps me going. So I've been a professional who has My entire 27 years of career have been wealth management. So a lot of our colleagues do various diverse businesses within the financial services. I have, sort of done pretty much everything around and enjoy, and that being the most exciting. In fact, you spoke about being, male dominated. In wealth management, has a lot of diversity. There are a lot of women bankers, leaders in this field. And I think managing wealth also requires a lot of element of like balance, maturity, trust, ability to look at things from various perspectives, to analyze risk. I think that women bring a very good element of doing that. And the fact that such large families and business owners actually see value in what we bring. And in my early years, saw families where they started getting in their, the spouses or their daughters to the whole process of managing wealth. I think that has been very exciting and meaningful to see over the years.
You're absolutely right there, right? Right about that. Even when now, some of these billion-dollar businesses in Hyderabad, and I know one promoter family was in energy transition and billion-dollar business. But when it comes to wealth management decision, he has subordinated that task to his 23-year-old daughter. So, and she's educated abroad. She's come back and she's very actively involved in. Of course, she's getting interned in the company as well to take on the bigger role. But the dad is busy managing his business. Okay, you take a call in deciding who should manage your wealth and so on.
The sharpest minds.
Yeah.
And bring the right element of understanding risk and managing risk.
Correct.
And yet taking bold decisions with a bit of balance, right? I think is the right blend that you need for managing money. I think so.
Correct. I can't agree more. I think Hurun, as a business, I'm also very proud. If you look at the top, other than me, everybody else in the leadership role, it's all led by women.
See,
It's worked out very well for us. And in a sentence, how does this year tell us about where India will be 5 years from now?
I think India, like I said, is going to be, wealth creation is not going to be restricted to geographies or sectors. We are going to see a much broader, wider, deeper.
End this conversation. What are your thoughts on collaboration with Hurun and what you've been doing together for the last 5 years?
Oh, I think our long-standing partnership over the last 5 years has been very valuable in giving us very data-driven insights to really keep a track of the whole wealth landscape in India, which is large by all means, almost 3.5 trillion. The market intelligence eventually helps us also keep refining our wealth management offering for all the new wealth creators in matching to their expectations and what their needs are. And also, I think there's a long-standing relationship with Hurun over the last 5 years has given us very invaluable data-driven insights that has helped us scope the whole wealth landscape in India, which is fairly large now at almost 3.5 trillion and above. And analyzing these economic shifts has helped us reinforce our position as a thought leader in the wealth management landscape to know exactly where the economic value is being created. And ultimately, market intelligence also helps us constantly refine and keep innovating on our wealth management offering for the wealth creators and entrepreneurs and families that we work with to match our expectations of what they're looking at from us. So I think that's really been a very deep relationship, very valuable over the last 5 years.
Thank you, Sonali. Lovely talking to you and such great insights on to hear from you on how you are looking at wealth and value creation in India from Axis Bank and Burgundy Private's perspective, being one of the largest, oldest, respected institutes in the country. It's very much important to learn from such insight when we as young entrepreneurs building our own enterprise as well. So thank you very much, and look forward to having many more such sessions in the years to come. Thank you.
Thank you so much, Anas. It was a pleasure. Really value the collaboration, and thank you for a very engaging chat today.